Hello everyone, we have a small content on lease CPA materials, and if you see the lease CPA materials, you will see several definition concepts are pretty much same what you already learned in the chapter. So we will highlight mainly that we didn't discuss a lot in our chapter content. So in the CPA material, first they defined what is a lease and what should be the criteria. So this definition of the lease contracts pretty much same. Here in the Baker part, we will see that a little emphasis on lease versus non-lease components and whether you will combine a contract or you have separate obligations and how we will do the allocation. It's what you learned. It's consistent with your revenue recognition part. So we'll see one example here, and then the module also discussed about lease classification test, which you also learned in your contents, and there is one example we will go over. It's about the calculation of lease payment. You know what you have to include, what not. And the last topic that we will emphasize and see a couple of examples, including the module and practice problems. The topic is sale leaseback criteria, and we'll see how the journal entries will look like when the criteria are met and when the criteria are not met. A lease contract must have an asset, and the lessor must convey the right to control the asset to the lessee. Now, a lease contract might have more than one components or multiple contracts. So the next question is whether we should combine all those contracts or whether we should keep a separate contracts. Now, if you can combine those contracts if you see that the contracts are entered into approximately at the same time and the parties related to all those contracts are the same, and you will see that another criteria could also be met to combining the contracts, which is related to the price. The performance or price of one contract affects the price on the other contracts, and those contracts are related to the same objects, then we can combine those. On the other hand, you can separate those contracts if you see the benefits that the lessee is getting from those contracts could be separate. That means on a stand-alone basis, and as well as together too. And if those contracts are not highly dependent or highly interrelated, then we could separate those contracts. Now, for a contract, you might have both lease and non-lease components. And there are two ways to deal with those. So one way is that you can separate those lease components from the non-lease components, or you can separate the lease components and you can also combine with those related to the non-lease components. So we will see one example of combining the contract. We will see how we will allocate the price when you have lease and non-lease components, whether you will combine those or you will put it separately. So Fast Science leases took microscopes to a university for 4 years, and one is microscope FE, another is microscope SQ, and these are the monthly lease payments. And here you will also see that there is some maintenance service, and you will also see the stand-alone price for all. Both microscope separate prices and these all separate maintenance amount. So now here the university will not pay maintenance fees for the microscope. They will just pay these monthly installment. For one microscope it's 7,750 and another microscope it's 8,600 for 4 years. These are monthly payment. Now the question is first whether you will combine those maintenance to the assets or you will put it separately, and how we will allocate the total payment that Fast Science will receive from the university. So now look, the university will pay only this monthly installment 7,750 plus 8,600. So if you add these 2 microscopes monthly installment for each month, they will receive 1,600,350, 7,750 plus 8,600, and this is for 4 years lease terms. So if you multiply it by 48 months, you will see here the total payment will be here. You will see the next page, the numbers are multiplying. This total payment will be 784,800. So this is the total payment will be paid by the leasee on monthly installment basis. Now the question is how we will allocate it among these 4 components, 2 assets and 2 maintenance. So now here, you know from other sources, these are the standalone prices. So you already learned how to do these allocation, and you can calculate the percentage. For example, microscope FE standalone price is 400,000 and total standalone price 915,000, so which is 44% of this total standalone price. So first step, you can calculate the percentage, and then here you can, based on this percentage, you can allocate those to each components. So for microscope FE, your percentage based alone standalone price is 44%. Then you take 44% of his total lease payment and you allocate this 44% of 784,800, which is 345,312. This is how we can calculate the percentage based on the standalone price, and then we can allocate the total payments. So here we are keeping the assets and maintenance separately. Now you could also do here, we can combine it. So we can combine microscope FE and the maintenance related to FE. So if you combine those, 400,000 is the microscope price and maintenance cost 30,000. So that will be here microscope FE and microscope FE's maintenance, and we can also combine the other microscope and its maintenance, and then the same way we can get the percentage and we can allocate it. So there are a couple of ways. Either you can keep it separate when you will allocate the price, or you can combine the lease assets and non-lease components related to that. So this example, it's very consistent with the revenue recognition price allocation concept.